I'm going to come to you, Terry. You've got a good plan to borrow some money while money's cheap, pay off our debt and give it to Peter Costello and the Future Fund to get the sort of returns that anyone wanting to invest money would die to see. How's it all going to work?
Well, very simply, Peter, I've thrown out this big figure really just for effect. It's probably too big a figure, $1 trillion, that we should take advantage of these extraordinarily low interest rates. As we know, in Germany, across the yield curve, they are now in zero territory. Germany can actually borrow 30-year money paying less than 0% interest. And just about any country in the world can borrow 10-year money at 1% or less interest, and we can certainly do that as well. And very simply, let's take advantage of this very low interest rate environment. Now, I'm not suggesting we borrow the $1 trillion and then go and splurge it on building very fast rail and, all sorts of crazy infrastructure projects or tripling public sector salaries or pensions and so on. It's really about lengthening the term of our existing debt, which is $600 billion in gross terms. It's outrageously irresponsible that we're not aggressively lengthening those terms while interest rates are so low, locking in the money. But on top of that, I would argue it makes sense to give something like another $150 billion, $200 billion to the Future Fund. We can't guarantee that it will continue to earn 10%, which is what it has been earning. But if you can borrow at 1% and you can generate a 5 or 6% return plus in the Future Fund, it is an absolute arbitrage no-brainer.
Andrew Stone, clever idea. This would solve some of the woes because no one's got the ticker anymore to introduce, payments for rich people to dip into Medicare, or no one's prepared to cut back welfare. Is this the way to solve our debt problem?
Actually, I'm always very hesitant to disagree with Terry because I have the greatest regard for him, but I actually don't agree with this proposal at all. I liked his other proposal in his article about the critical importance of low energy costs, but on this one, the nature of the market is such that if we borrow cheaply now to retire debt we previously borrowed, we're going to have to pay more for that because the owners of that, the holders of that debt are being paid 5-6% or whatever. So if we buy $1 billion of those debts from them, we're going to have to pay more than $1 billion to do that. So we don't, per se, get any money. In fact, we lose a little bit on the transaction costs.
Can I just interrupt, Peter? I suggest we don't accelerate the repayments. We let those mature and we repay them as they mature. So we don't do what Andrew's suggesting, but we aggressively borrow ahead of those repayment schedules.
But then if we're just borrowing as they mature to repay, that's what we'd be doing normally anyway.
No, but you need to lock in the low interest rates now, Andrew. You need to lock in the low interest rates now on the new debt.
Well, even so, the nature of the market means I don't understand how we will actually save money per se on doing it. I agree, you will lengthen, you'll alter the duration of the debt portfolio, lengthen it out, and there may be some advantages in doing that. In fact, I'm certainly open to that, but it's not a magic way of making a whole lot of money because we previously paid a lot higher interest rates and now we'd have to pay lower ones. And secondly, just very quickly, I'm also concerned about, I see the argument about borrowing a whole lot of money cheaply and then giving it to the Future Fund and they'll make a great return. The trouble is, you get into the business of saying, well, why not, if $200 billion, why not $2 trillion or whatever? Basically, you're saying the government should borrow a whole lot of money and then get into the business of having the government make stock purchases all over the place. And of course, instantly politics will get into this. And then you'll have all sorts of things, the government will change, and then they'll give a directive to the Future Fund that, well, we mustn't have any investment in any coal companies or something because they're, destroying the environment or whatever the argument is. And instantly the whole stock exchange will be completely politicised because this giant actor will be having this outsized effect and its decisions won't be being based on economics or return, but on shareholder return, but on all sorts of other political calculations. So that's my concern, although I see the attraction of that part of it. That's my serious concern.
Okay, well, one of the reasons why, debt is burgeoning here in this country, Adam Creighton, you've done a lot of work on this, is public sector wages, what we pay our public servants right around the country. And we pay them top dollar. We pay them top dollar when you compare them to public servants in London. I have to say, in Britain, I was over a couple of years ago, met with David Cameron's office. There are 55 people in the Australian Prime Minister's office. When I went into 10 Downing Street, there were 7 people outside of David Cameron's door. 7 people, that is it. I mean, there were some cleaners there, sure, in Downing Street, but that's his entire political staff, and he's paid half of what my then Prime Minister Tony Abbott was paid. So, I mean, Really and truly, we've got a crook here, haven't we?
No, look, I think that's true. We've kind of ratcheted ourselves into this parallel universe in Australia where it's just considered normal that if you're a senior staffer or a senior public service, you have to get, paid, a 300, 400, 500,000 or even more, actually, as you know, in the case of the federal bureaucracy. It's quite extraordinary. I was talking to a friend in Canada today and he was equally shocked by the level of our senior public service salaries here. He said in Canada it's nothing like that. They're certainly much higher than the US, but the broader point is that, it's very expensive to increase the pay by 3% of the entire public service. There's something like 2 million people across the country in the public sector, broadly defined, and if we followed along with what the Reserve Bank Governor said this week, that the wages should be rising at 3% for those people, that is an extraordinary extra burden for taxpayers who are already forking out about $159 billion a year for the public sector in terms of the wage bill. So, yeah, there's just no reason to do that.
Now, Terry, you're going to have to take out a big loan in Victoria to afford your power bill this summer because the power futures, some data out today, 50% surge likely. It's certainly in the futures price for power in Victoria over the summer. Now, let's hope it's not a hot summer for you. You've had a cold winter. I bet you people are going to have to jump over their bills when they land very, very soon in the next few weeks. But what's the issue in Victoria? Because every time I hear that Energy Minister in Victoria, Ambrosio, she inspires me with absolutely no confidence whatsoever.
How can you possibly say that, Peter? I mean, we want to put more and more wind farms right across what's left of Victoria and more wind farms in Tasmania as well, if Bob Brown will allow us to, and that'll solve all our problems. When, in fact, we're talking about really insane reality now that the very problem is too many wind farms, as you know, too many wind farms, not enough baseload power, which is obviously coal and some gas. And Lily Ambrosio thinks the solution is to further unbalance it, to have even more wind farms as you have fewer and fewer reliable coal-fired power stations. And the reality, of course, is we've seen this when Hazelwood closed and you had this big spike up in power prices. And the prospect is that it's going to happen again when you've got existing power stations that some of the generators are out of action. And it's not just Victoria, because the way the national network works, it drags power prices up right through New South Wales and Queensland. And we saw that overnight a couple of nights ago when the wind died right away, and you're looking at prices up around $600 and more at the wholesale level.